Could IBM be the next AI stock to soar in 2024? Well, the company just reported earnings and the stock is already soaring following these results. So in this video, I'm going to review IBM's latest quarterly results and give you the secret words that IBM management said that sent this stock price soaring. And I'll also answer if IBM is an excellent stock to buy for investors looking to capitalize on this AI trend in 2024.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So here in the company's fourth quarter earnings release, management saying in the fourth quarter we grew revenue in all of our segments, driven by continued adoption for our hybrid cloud and AI offerings. And here are the secret words. Client demand for AI is accelerating, and our book of business for Watson X and generative AI roughly doubled from the third quarter to the fourth quarter. Those were the secret words that sent IBM's stock price soaring after these results were out. It seems like 2023-2024 has been the year of artificial intelligence. Any company that can highlight to investors that they're benefiting from this AI trend is rewarded by the market, and IBM was no different. After announcing these earnings results and revealing these keywords, the stock price soared because everything else we're going to look wasn't all that incredible. But the key was that IBM is starting to benefit from the burst in AI demand. So let's move on. For the year, revenue growth was in line with their expectations and we exceeded our cash flow objective. For the fourth quarter, like I mentioned, revenue was not incredible, up 4% year over year to 17.4 billion. The three segments up 3%, 6%, and 3% for IBM in the fourth quarter. So it wasn't like the company delivered exceptional revenue growth in the fourth quarter, but this AI demand roughly doubling was huge. That's the huge boost that IBM got. And you can see the stock price. This is the last 5 days stock price. You can see after the earnings came out that shoot straight up, and now it's coming back down, adjusting to the initial enthusiasm from those numbers that came out. So for the full year, revenue of 61.9 billion was up 2%. Software up 5%, consulting up 5%, infrastructure revenue down 5%. Again, a mediocre pedestrian year for IBM. This company is not a fast-growing company to begin with, but longer term, it expects mid-single-digit revenue growth, somewhere between 4 to 6% revenue growth. So for 2023, the 2% revenue growth was a bit below target. Gross profit margin expanded to 55.4%, up by 1.4 points. That was solid. Net cash from operations of 13.9 billion was up by a whopping $3.5 billion, and free cash flow of 11.2 billion was up by 1.9 billion. This was where the company delivered exceptional increases. Let's take a moment to look at the importance of cash flow from operations. Cash flow from operations is one of the most vital metrics I consider when making an investment decision. If any financial shenanigans are happening, looking at this metric can help uncover the fraud. Moreover, looking at profitability without considering cash flow from operations can lead to a misleading picture of a company's performance. For instance, look at the example I have created here. The company reported a net loss of $250. However, when you look at the cash flow from operations, it was a gain of $35. How can that be? Well, two expenses a company must report on the income statement are depreciation and stock-based compensation. Importantly, these are non-cash expenses. Money is not leaving the company for these expenses. In the case of depreciation, when a company buys a machine for $750, it pays all of that price up front. However, generally accepted accounting principles require that the company take the expense over a period the machine is expected to operate. So if the machine is expected to last for 10 years, the annual expense will be $75 per year for 10 years, even though the company paid the $750 cash at the time of the purchase. Also, when a company offers its employees a stock option, it's not parting with cash. However, it must record the cash value of the option as an expense on the income statement. So moving on to the working capital items, inventory management is the easiest way a company can increase cash flow. The simplest case is when a business has 100 inventory units, sells 30 units, and doesn't replace those units. The decision would reduce total inventory and increase cash flow. As you might already be thinking, this isn't sustainable. Eventually, the company will deplete all its inventory and go out of business. Accounts payable is the money that a company owes another company and has not paid yet. And accounts receivable is the opposite. A company can increase its cash flow by collecting payments faster and paying suppliers slower. If done with skill, companies at scale can take advantage of these timing differences to boost cash flow by a couple of percent annually. Costco is one example that employs this strategy masterfully. Overall, if you observe cash flow increasing unsustainably, you should expect a reversal of that trend. The other big risk to consider is if you see a company reporting substantial profits but negative or weak cash flow due to rising accounts receivable. So now that you understand the significance of cash flow from operations, you can see why this was extremely impressive from IBM to boost its cash flow from operations to such a magnitude. So for 2024, I think investors were happy with the forecast from IBM. Management saying that the revenue is expected with constant currency revenue growth consistent with its mid-single digit model. At current foreign exchange rate, currency is expected to be a 1-point headwind to revenue growth. So for 2024, management saying that they should hit that target of between 4 to 6% revenue growth. And if AI demand is as strong as management said it was between the third and fourth quarter, that trend is likely to continue, and perhaps they can exceed these revenue forecasts for 2024. Free cash flow for the year is expected to be about 12 billion, slightly above what they achieved in 2023, which, as I mentioned earlier, was a significant increase. So not surprising that their free cash flow is not increasing by all that much because they improved significantly in 2024. Expectations have yet to be adjusted for IBM. What I have here is fiscal year 2024, and analysts expect IBM's revenue to increase by 2.7%. So Wall Street analysts have priced in 2.7% revenue growth for IBM stock. Now management is saying they're going to grow mid-single digits. Mid-single digits is between 4 to 6%. Low single digits is 1 to 3%. High single digits is 7 to 9%. Wall Street jargon. So 2.7% expectations is below what management is forecasting. I wouldn't be surprised if in the coming days and weeks, Wall Street analysts update their forecasts and increase their revenue forecasts for IBM, which, if they do indeed increase their revenue forecasts, it's likely to lift IBM stock higher if they do increase this revenue forecast. Or they might stick with this revenue forecast, believing that management is too optimistic for 2024, suggesting that maybe management is overestimating its revenue growth. So I'm going to be following this over the next few weeks for IBM stock. And so despite the increase in stock price, IBM stock is not prohibitively expensive. It's trading at a forward price to earnings of 17.58 and the price to free cash flow of 15.29. And given that for now, I think Wall Street is underestimating IBM's revenue outlook for 2024, which is going to lead to increasing earnings per share if its revenue is better than expected. I think IBM stock is a buy right now following its earnings report. So overall, I think IBM is a solid AI stock to buy for 2024. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.